Here again with Smart System. In our last lesson, we learned about the flag and pin it chart patterns, as well as strategies for trading each when we find them in an uptrend or downtrend. In today's lesson, we're going to look at a similar chart pattern, which is known as the triangle chart pattern, so that we can learn some strategies for trading this chart pattern. So let's get started. The triangle pattern can be broken down into three categories, and these are the ascending triangle, the descending triangle, and the symmetrical triangle. While the shape of the triangle is significant, of more importance is the direction that the market moves when it breaks out of the triangle. Lastly, while triangles can sometimes be reversal patterns, they are normally seen as continuation patterns. Take a look here. Start with the ascending triangle here. And the ascending triangle is formed when the market makes higher lows and the same level highs. Okay, these patterns are normally seen in an uptrend and viewed as a continuation pattern as the bulls gain more and more control, running up to the top resistance line of the pattern. You normally see this pattern in an uptrend. If you do see it in a downtrend, it should be paid special attention to, as it can be seen as a powerful reversal signal if it does show up in a downtrend. So we have a chart of Walgreens company here, and you see the higher lows there, and then you see the same level highs. And what that indicates there is that as the market and the buyers continue to bump up against that top resistance line, you can see they're gaining more and more control as the market does sell off, but it sells off less and less as the pattern matures, indicating that the buyers are getting more and more control, and therefore a lot of traders gonna look for a breakout there of the top line to be imminent in that situation. The descending triangle is basically the opposite, or the ascending triangle flipped upside down. You can see that this is formed when lower highs in the same level lows are made. These patterns are normally seen in a downtrend and viewed discontinuation patterns as the bears gain more and more control, running down to the bottom support line, in this case not the resistance line. And while you normally see this pattern in a downtrend like the ascending triangle, if you do see this in the opposite trend, which is the uptrend in this case, you should pay special attention, because this can be seen as a powerful reversal signal. So we have a chart of the dollar-yen here, and we see the lower highs there, and then the same level low. So you can see basically flipped upside down there. And again, here what the market is showing from a supply-demand perspective, and why this pattern is paid attention to is because as that the lower highs are made, it indicates that the buyers are having less and less control, running down into the support line, and the sellers are getting more and more control, and therefore a lot of treasures will look at that as a bottom break of that bottom support line is imminent there. The symmetrical triangle is unique in the sense that a lot of times you're gonna see this not an uptrend or a downtrend, but in a directionless market, as neither the bulls or the bears or the bars or the sellers are in control of the market. So we see a contracting range and a directionless contracting range. So unlike the rising or falling wedge, the triangle, which is similar to those points off to the side, indicating that neither the buyers nor the sellers are having any control over the market. And this is formed when the market makes lower highs and higher lows, and basically is going to be seen, if it is in an uptrend or downtrend, is going to be seen as a continuational reversal pattern, depending on which way it breaks out of the pattern. So we can see here the lower highs, and then the higher lows forming the pattern, and the contraction there, and eventually, the market does break out of the bottom of that pattern. And when it does, it breaks out pretty forcefully, as you can see there. So you can see again as the pattern matures, the range gets narrower and narrower, indicating that neither the buyers nor the sellers have control. So once the pattern does break, that's indication that the sellers have taken control in this instant, in their instance, and therefore the markets are broken pretty significantly there. So that completes this lesson. You should now have a good understanding of the different types of triangle patterns and what each signifies. And our next lesson, we're gonna go over strategies for trading each of these patterns, complete with entry and exit points. So we hope to see you in that lesson. As always, if you have any questions or comments, please leave them in the comment section. Have a great day.